Bill said, why is there so much volume in SPY puts and calls one day from expiration? Okay, Bill, well, there's a lot of reasons that that could be possible. I don't know whether you're talking about the entire volume of puts and calls, excuse me, Bill, meaning across all strikes and across all expirations, or if you're just focusing or concerned, I should say, with the movement on that particular expiration. In any case, let's do this first. Let's just go to SPY, and I'm going to go to the quotes page first. It gives us all of the stock information. And today's put volume is 5,724,795. Today's call volume, 4,179,400. That's the total contracts across all expirations and all strike prices for SPY today. The total open interest is 13,788 puts and 8,145,412 calls. Very high put call open interest ratio of 1.6. Pretty high call put ratio, put call ratio volume wise at 1.4 as well. Now let's go ahead and go to the chain. As always, it might take a minute or two to just pull up there for us. And here we go. Let's go at the money. Bill says close to at the money. Why is there so much volume in SPY puts and calls one day to expiration? So what do we have here? I apologize, Bill. Sorry for the scrolling. That's my open interest on my calls. I don't have volume for either. So let's add the volumes. And we're going to add them as first and last. What do I mean by that? Current option volume and previous option volume for the put, current option volume and previous option volume for the calls. Let's change the column order. I want these two to be the last ones for the calls, and I want these two to be the first ones for the puts on our chain. So let's move those up, shall we? I make it cleaner by removing some of the other ones, but we're not going to bother with that right now. All right, so let's go ahead and close the window, refresh our page. The At the Money series. This is our volume column. I'm on the small chain already. Sorry, folks. Let's scroll down. There we go. So there is previous and current. And here is previous and current volume. Wow, those puts are amazing as far as that goes. The call previous volume was not that much from yesterday. But here we're at 44,560, 129,560, folks. I'm sorry. 148,301, 18,000, 22,000, 20,000, so on and so forth. And here you've got similar numbers with the high volume, but there was a huge previous volume in the puts as well compared to the calls. It wasn't that high, although it gets pretty high down here and we're getting to these prices. Why is it so high up here from previous option volume? Well, that's where we kind of were before today's decline, weren't we? A little bit out of the money. Now, why 1 or 2 days, Bill, remaining to expiration? Why is this so high? It's because all the activity, the open interest on all these positions with several thousand contracts being traded at the different strikes, especially as SPY moved up, started to have that run, people trying to buy calls and buy puts, whether it was 2 days out, whether it was 3 days out, meaning the Monday bill, the Wednesday, or the Friday expiration. The day before and the day of expiration, you typically see the highest volume because people are closing positions, whether for profit or to limit losses. This morning, there's probably a ton of activity. Looks like people buying a lot of puts at these lower strikes to try to take a quick, maybe daily profit. I personally don't day trade options. I know many that do. And what's the easiest way to trade it is following what the market's doing with broad-based ETFs or even the indexes themselves, SPX, SPY, NDX, QQQ, or Russell and IWM. Or sometimes investors even like to use the small caps as well. I prefer to stay with the larger ones myself personally. Could be straddles or strangles. That's what I'm doing with SPY right now. It's in no man's land, actually. I switched it when we saw the very bullish buy. I took a huge profit off of that strangle position then. But now it's with the move back down, it's sitting there in no man's land because the call and put haven't countered each other yet. Then in any case, that's not what you're asking. So a lot of this is just rolling and adjusting. Some of it was daily trading. A lot of it is rolling out to the next cycle. Some people might have closed sold puts. When the market ramped up, they might have been selling puts here to be out of the money, but as the market started to turn today, they had to start actively closing those positions, maybe rolling them out in time if they're doing naked puts against SPY. These could be covered call positions where people are buying them back cheaply now, maybe even buying back here to roll out the next cycle if they were deep in the money. But that's where you always see the most activity, is right around expiration, positions that may have been open for 5 days, 2 days, 15 days. They just decided to choose the 7th of October expiration from 2 weeks ago. They're closing and adjusting their positions. A lot of this, Bill, could also be various spread positions. I mean, this here, the volume here, 296,000, Bill, 525 at 363, 295,358. This could be a lot of bear put debit spreads, or they could have been bull put credit spreads that got in trouble, selling the 365 and buying the 363 for a 3 or 4 day trade. It's very potential, but because those numbers are extraordinarily close. So sometimes when investors ask me questions about the volume and say, hey, why is this strike so much higher? I just say, oh, but if you take a look at this one and you look at this one here, they're almost the same number. Now, I'm not saying someone's doing 129,000 contracts of a credit or a debit spread, but sometimes you see the numbers link up like that where they're very, very close. We can almost infer that there's some kind of large spread going on in that position. Or maybe some gentleman or gentlewoman made reference to the fact that, hey, we're doing bear put spreads on SPY by selling the 363 and buying the 365 as we think the stock's going to be trading around 363 for a 2 or 3 day trade. And a lot of their followers jumped into it in 10, 15, 20, or 50 contract blocks. And then today they closed them out. So that's typically why you see it. And there could be, yeah, the dancing, as you mentioned. He says, I get the legs are dancing. And it very could well be that there are many more people than I suspect. I know I don't do it. That doesn't mean a lot. But there might be many more people than I suspect that are trying to open positions in the first hour based on the market movement and what's going on, and looking to close them 3 or 4 hours later just on the day of expiration. I know I had a webinar a few months ago. One of our attendees, and I believe a PowerOptions subscriber, had asked about what criteria would you use to find daily spreads on SPY. And he didn't mean opening positions on Wednesday for Friday's expiration. He meant opening positions Friday morning to close the spread by 1 o'clock or 2 o'clock that day in order to try to realize a profit, not near the full profit. You know, if he was expecting a profit of maybe 7 or 8%, he was looking to close it for a 3 or 4% return, getting close to half of that if the market went in the direction that he wanted, Bill. That's too much hassle for me to trade with. I've got coaching sessions and phone calls and emails. I can't watch my screen that much, but I know a lot of investors will try to do that. It's just not my kind of game in that case. But that's my thoughts on that, Bill, of why you always typically see so many SPY and even SPX options would have the same kind of volume. And in the pods here, 9 times out of 10, oh, I don't have it, but let's add it in. Let's see. Maybe I do have it and I just missed it. There's the power tip. There's the power pull, stock losers, stock gainers. Okay. I don't think it's here. I think it's just in the other section. Okay. So what I'm looking for, let's go to the Learning Center. Let's go to market activity. And I think I want to go to market statistics. Actually, I'm sorry. I know I want to go to market statistics. Industry gainers and losers, stock gainers and losers, individual options. There you go. Highest volume, all, as you mentioned, Bill, good eye. All of them here were the SPY sort of at the money, 363, 365, 360, 362. More puts than calls, but we saw that with the put-call volume ratio and the put-call open interest ratio. Highest open interest options, interesting, HYG. SLV, oh, that makes sense to me personally. And they're calls. That's why I got into NEM, because after that bottom, Newmont Mining, it sounds like I'm saying anti-M, so I just got to keep saying Newmont Mining. But I thought that the metals would have a really good bullish outlook after we started seeing those very bullish buys. I mean, Newmont Mining was coming off its 52-week low of $40 when I bought in at that 42.30, 42.35 price. So I thought that was a good thing. HYG is a silver stock, am I right? Oh no, this is a yield bond. That makes even more sense. My apologies. I'm thinking of something else. But yeah, HYG there, the yield bonds ETF, perfect sense. Puts. That's why they're going junk bond. Yeah, Bill, indeed. But all puts. Nokia calls. That's very interesting in my opinion. VIX calls. Wow. That's alarming. Hopefully someone's selling those. If someone's buying the November 16th, 60 calls, highest open interest there. Someone's expecting a rise to 60, then someone knows something I don't. I'm going to be very nervous about. That would nearly double VIX where we currently are. Maybe they're just looking for a quick profit with a cheap, deep, out of the money November 16th call on the VIX. Let's see the prices here. 74 to 89 for 60 days out in time on the VIX. The 60 strike call. Huh. I might have to look at the VIX chain and see if I can see something in what we just talked about there. That is, yeah, that's extreme. Maybe they're selling it as a naked call. I mean, we're about 100% out of the money. What's our 91.3% out of the money? But if there's a jump up to 35, this could possibly go up to 160. It could be a 50% return in theory, I guess. Close enough time frame. Yeah, or on the cheap call, just buying it cheap for some return, 20 to 25%, or maybe they're selling it deep out of the money too. But whoa, that's a high strike. Yeah. Okay, so this is where we look for it, and as Bill mentioned, this is where he probably started to notice. Maybe he was looking at the chain. This is where he probably started to notice the high volume of puts and calls on the day of expiration, maybe even yesterday as well. But we don't have a historical view of this market statistics page. Okay. Oh, sorry, let's go back to the main homepage. So, Bill, I hope that helps out with your question. I think of any other thoughts, I'll be more than happy to include those later on or share them with you via email. But yeah, that's pretty much what we expect to see. And we probably saw those were the largest volumes. It was clear there by the market statistics page. We probably saw some pretty high volumes as well on further expirations. Even though we're crossing today's expiration, some positions might have been rolled or adjusted with today's movement, depending on the structure the investor was in, whether it be a spread. Hey, on SPY, may have even been a covered call position in those cases. Mike, I thought it portends. I'm sorry I said pretends. Bill says it portends to further declines. Possibly true. I expect choppy markets. I'm just not sure how much further we're going to see a decline before we maybe potentially snap back. But I'm going to keep naturally my eye on it because I've got the two married puts now. Got that strangle position that can go in both ways, a couple of strangle positions, but the main one we talk about is SPY. And I have a couple collar positions, standard collar positions open as well.